Good afternoon. We hope you all had a great weekend. On today's market update, we'll cover the latest on artificial intelligence spending plans from the big cap technology firms. In an ode to the classic NBA Jam video game, earnings from the large cap tech firms the last 2 weeks confirms they are indeed on fire. We'll also consider whether the economy is bifurcated between everything related to AI and the rest. Investors have been questioning how long the spending party for large cap tech firms investing in AI can go on. The answer? Longer than you think. Meta, Alphabet, Microsoft, and Amazon alone spent nearly $100 billion last quarter and all guided to meaningful capital expenditure growth for the remainder of the year and next. They're locked in for a battle to either develop leading AI models or capture market share in cloud computing that's benefiting from AI investment and usage. As users of AI ourselves, we think this is a structural growth trend for compute demand and all the beneficiary firms involved in the ecosystem, from chips to power to cooling to construction services. Model training requirements and newer reasoning models like ChatGPT's o3 use considerably more compute resources than earlier iterations, and their usage is only accelerating. This morning, OpenAI reported that ChatGPT now serves 700 million weekly active users, up 4x from this time last year. Google announced on its earnings call that its Gemini model now has 500 million monthly active users. And Anthropic's Claude model has become so popular for coding that its revenue growth guidance has jumped 10x since the start of the year. The demand for compute is there, and the large cap tech firms building out AI infrastructure continue to spend into the investment and revenue growth opportunity. On earnings calls the last few weeks, each of the large cap tech firms building out data center infrastructure alluded to being compute constrained and cited that as a limitation to revenue and earnings growth. From Amazon CEO Andy Jassy, we have more demand than we have capacity right now. Alphabet CFO Anat Ashkenazi, we expect to remain in a tight demand-supply environment going into 2026. From Microsoft CEO Satya Nadella, customer appetite for AI infrastructure is running ahead of the compute we can stand up today. We're adding multiple gigawatts of data center power, but demand is still outpacing supply. And Meta's CFO Susan Lee said, the infrastructure planning process remains highly dynamic. We're bringing additional capacity online to meet the needs of our AI efforts. While everything AI related seems to be firing on all cylinders, the key question is how is the rest of the economy holding up? Investment spending in compute equipment plus software overtook personal consumption spending last quarter in terms of its contribution to GDP. Various metrics are showing some weakness on the part of consumers who may need to contend with pricing implications soon of tariffs. Notably, consumer-related stocks have underperformed tech and AI-related firms this year. While AI spending is propelling the investment side of the economy, the labor side is also contending with weakness. On Friday, the Bureau of Labor Statistics released its July monthly jobs report, which showed major downward revisions for June and May, drawing the ire of President Trump, who accused the numbers of being rigged. We don't share his criticism of the economic data. Rather, we look at it to gain insights into the health of the economy and market. So long as the investment spending cycle plays out in AI, and we believe it's a multi-year cycle, we think the economy will hold up as the numbers involved are so large. However, we do think that the economic data indicates investors need to be selective as to where they allocate capital. Softness in consumer spending plus a deceleration in the labor market could be a risk factor for consumer discretionary related sectors in the months ahead. On the other hand, firms benefiting from the AI investment cycle are poised to continue seeing strong revenue and earnings growth. If you have any questions about today's discussion, please don't hesitate to reach out. Thank you and have a great start to your week.